Welcome to Money Talk with Aaron Ricketts, presented by Ricketts & Associates, 3245 North Adrian Highway, Suite F. The opinions voiced on Money Talk are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. Back in the studio with Aaron Ricketts. Aaron, of course, is on the phone. Good afternoon, Aaron. How you doing?
Hi, John. Doing well.
That's good. What do you think? You think we're getting closer to maybe the light at the end of the tunnel here?
There's a flicker. I know we've had some, changes, right? We might have the last week or so got a hold of this virus expansion, and for the most part, and we certainly have in this state. And I think we're going to see, back to normalcy very slowly, but we'll get back to some type of normal. I think the biggest thing that we all probably miss is just wanting to hang out with one another.
Right.
Of course, looking at it from a financial perspective, we all need to get back to spending money like we did before, our normal way of spending money. Because a lot of the online shopping markets, the companies are doing very, very well, but we need to get our local businesses and small businesses and, of course, workers back to their jobs so they can earn the pay to go buy those things. Consumer spending is a huge part of our economy, and we need to get that going before we're going to see anything improve. Leading from that is our discussion about the market, and why the market has recovered so quickly and so fast. I'm sure people, got their statements from the quarter end, end of March, or their monthly that ended March, and saw, significant declines in their values of their accounts if they are invested in any way in the stock market. So talking about that, the market hit its low for this year on March 23rd. And I always make sure everybody understands when I say the market, I'm talking about the S&P 500. I'm not talking about the Dow Jones, the NASDAQ, or any other index. I'm talking about the S&P 500, the 500 large companies that are in the United States. That hit a low of minus 30. The Dow Jones, which is only 30 companies in that index, was down even more than that, around 40%. And it hasn't come back as much as the S&P 500 has. But today we're sitting, as of last couple days, we're down about 8% for the year. The market hit its peak in mid-February, and from there it's still down about 13-14%. But the S&P 500 from year to date is down about 8%. So that's a good sign, right? When you go from minus 30 to minus 8 in 5-6 weeks, pretty quick.
Isn't it just amazing the resiliency of the markets?
It is. It truly is. And there were those thoughts that were going through my head. We could see, of course, the media was pointing it all out. We could see, 40, 50, 60% decline like we did in 2008 and 2009. Those were really, really tough times, but they were kind of just like what we're seeing now, very quick, very fast down. And then within even 8 to 10 months, markets recovered a lot of what they had lost in a very, very short period of time. If markets hold to where they are, and I'm certainly not suggesting that they will, and I have a feeling that we will see another decline, very, very possible, because we've already kind of seen that a couple times. But it's been such a short period that it has happened in. Sometimes we just, haven't been paying attention to it or seeing it. But I think that if the market holds, where it is, it's simply predicting what may happen in the next, 3 to 6 months, that we may see one of the shortest recessions in the history, because we certainly are in a recession. The first quarter contracted by almost 5%. And if you think about it, January and February, at least, half of the year, that quarter, the market or the GDP was doing very well. But because it just put the brakes on for the last 6 weeks, it just, and I say 6 weeks, maybe even less than that, maybe like 4 weeks, it ended up negative, near 5%. That's significant. I've seen some models that show, down 20% for at least a quarter, maybe this coming quarter. But it's also very possible that, we started the quarter April 1st, so we have April, May, and June. And, if the economy starts firing up again, let's say we're on 4 cylinders, if it's a 8-cylinder vehicle. If we're on 4 cylinders today, at the end of May, we might be at 6 cylinders, and who knows, we might be at 7 or 8 cylinders by the end of middle June or late June. And that might bring us back to, that 20%, down 20%, and bring us right back up. Whatever the case is, that gross domestic product is a very important indicator, but it's always that lagging indicator where markets aren't looking at that now. They are looking at, the future. And they believe that, in 3 months and 6 months that the normalcy will be there where the economy will start firing on all 8 cylinders at that time. So a couple things in addition to that to know is that, and we see this and we know this, Congress has acted, the Federal Reserve has acted. They have continued to say that they call it all hands on deck. They're going to do everything that's necessary to keep the economy stable as much as they can, and promote and give small companies, mid-sized companies, the ability to maintain their businesses through this crisis. Because there are some sectors, right, that have virtually no income right now. That's coming in, like cruise lines and casinos and hospitality companies. They need, some assistance or help, because if this continues to go on for another 2, 3, 4 months, they're not going to be able to pay their bills. And some of those companies are already in dire straits. Oil companies, right, they got some income coming in, but pretty much they're selling their product for less than what it's costing them, right, to produce. So how long can that last? And it looks like the government's going to try to help them too. So we're going to probably see, and as we saw this in 2008 and 9, whenever the government props something up, it seems to come out smelling like a rose. So I tell my customers and clients, and I tell my friends and family that, boy, if you want to target a particular sector, go after those companies that the government's giving some assistance, right, buying into their business, or giving them low interest loans or long-term loans to help them through this. So I think one thing I wanted to give people some little upbeat thoughts here. I got some quotes that are pretty interesting. I'm always interested in what former economists have to say, or former investors or current investors, and some of them are I won't call them my idols, but maybe a distant mentor. But others, I might not really agree with a lot of what they do and what they say, but boy, they just had one good quote that I had to write down. So here's some quotes. Warren Buffett quote. This is probably the most well-known quote from Warren Buffett. He says, "I will tell you how to become rich. Be fearful when others are greedy, and be greedy when others are fearful." And along with that, probably my favorite quote is from a Rockefeller, and they asked him, how he got so rich, and he said he bought when there was blood in the streets. And I just really am impressed how these guys think that, so contrarian to, when the market's selling off, right? Why is it selling off? Because there are more sellers than buyers, so there's fear. And these guys are doing just the opposite. They're going in and finding the deals, right? And that's how they become successful and wealthy. Warren Buffett's one of those guys that people think that he's a big trader out there, trader, T-R-A-D-E-R, that he goes out and he's, buying and selling a lot. He doesn't buy too often. And I don't know if it's once a year or once every 2 years, but when he buys, it's a big deal. Remember he bought into Apple about a year and a half ago, and maybe it's been 2 years now. He bought $25 billion worth of that stock, which is at the time about 5% of the company. That is just incredible, that amount of money going in. And within a short period of time, Apple stock declined like 20-30% back in 2018. So I guess it's been over 2 years. So then it recovered nicely, and it's pretty close to all-time highs even today. So it's always interesting about Warren Buffett.
Yeah, well, you said Warren, I mean, he rarely buys, but he almost never sells.
Yes, he is certainly the buy and hold strategist from way back.
And, I'm just thinking, Aaron, that those people who just sat tight with their 401ks and didn't do anything are, down only about 8%, and they're looking to be in pretty darn good shape once this thing turns around.
Absolutely. Patience. You got to have patience. You need to diversify and remain invested. I mean, those aren't complicated, statements, right? It's just that's how it works. My quote that I like to coin, I'm sure somebody else said it, but I've been in business 20 years now, and this is my third decline, steep market decline, third recession, third really hard market decline. And I say this over and over. People ask me, when is a good time to invest? I say yesterday. I don't know.
Right.
Nobody knows, right? Unless, if you do know, you have your own private island because you figured it out. But I don't know too many that do that. There's some that get lucky, but most people, they figure things out, and they do just like what I'm talking about with Warren Buffett. Now, he does his research. He buys and holds. He has faith in the American economy. And that's just how most investors that are successful, make their money, and they do that, over and over again and time again. And I don't even think Warren really likes the spotlight, but he feels like it's necessary to be a teacher in this world that we often get a lot of bad information from some people that think they're good teachers. So. But my famous quote. Here's my famous quote. I said, "What's the time to invest? The best time? Yesterday." In addition to that is invest as much as you can, as soon as you can, for as long as you can. How's that?
That's pretty good.
All right.
That's pretty good. So we got about a minute here.
All right, couple more quotes.
Yeah, let's hear them.
All right. This one's from Robert Arnott. He says, in investing, what is comfortable is rarely profitable, right? So a month ago, if you were buying stuff, whenever you buy, that day you buy, the next day, you got buyer's remorse. Because if your stock or your mutual fund drops 5-10% that next day, you're like, I knew I shouldn't have bought yesterday. But if your stock goes up 5-10%, you're like, I should have bought more yesterday. So it's always the long term. You got to think about that or think like that. Here's another one. It's not how much money you make, but how much money you keep, how hard it works for you, and how many generations you keep it for. Financial peace isn't the acquisition of stuff. It's learning to live on less than what you make, so you can give money back and have money to invest. You can't win until you do this. That's my buddy Dave Ramsey. I promote him a lot. And the last one is, the 4 most dangerous words in investing are, "This time is different." That's Sir John Templeton. Follow market trends in history. Don't speculate that this particular time will be any different. You know how many times I've heard that or seen that in my own I guess economic and my journalists that focus on the finance world, how often they write about this still again today.
Well, Aaron, these are great quotes to live by, and if people want to hear them, how can they do that? What's the number to call?
Call me, 265-3540.
All right, Aaron, thanks a lot. We're going to talk again next week.
Thanks, John.
Take care and be safe. That's Money Talk with Aaron Ricketts, presented by Ricketts, Associates, 3245 North Adrian Highway, Suite L. The opinions voiced on Money Talk are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Securities are offered through LPL Financial, member FINRA SIPC. Join us once again next week for Money Talk here on 103.9 WLEN.